Hello, welcome to the HI Humble Investor Bull Bear Market Report for the week of June 25th, 2018. My name is Adam Straseske, and here is our agenda. We're going to keep it consistent. We're going to go over the broad market readings, and then we're going to get into the operating plan for this week, what we saw last week, and what we like coming into this week. So we start with the barometer. It essentially stayed the same. We had one of the indicators that went from a mixed to a bullish standpoint, and then we had one that went from a bullish to a mixed standpoint. So the needle stays right there, and looks pretty good for the bulls right now. Even though the market has weakened, the bulls are still in charge on the longer term oscillators. As far as 12-month momentum, looks good for the S&P 500. It is greatly outpacing Treasuries, very much like the MSCI All World ex-USA Index, except for it is stronger. And that is why we're focusing on the U.S. markets rather than the international markets at this time. When we look at breadth and correction risk, it turned positive this week. Last week we had a negative divergence on the oscillator, on the shorter term oscillator, represented by this light pink line. I don't know exactly what color that is. Pink line right here. We had a negative divergence. You can see that the oscillator made a lower high while price made a higher high. Now we have the exact opposite. We've got a positive reversal. And a positive reversal is simply where we have a lower low in the oscillator and a higher low in the price. So this is positive. This is a bullish for the S&P 500 as far as breadth goes on the shorter term breadth oscillator. The S&P 500 on a weekly, we had a sell trigger this past week. Here was our very weak sell signal the prior week, and then just this past week it triggered a sell signal. Even though it was pretty weak, down 0.89%. Would have been better for the bears if they could have closed it on the low for the week, but they did not. So we've really got a couple of things going on here. We're basically on support from a breakout from 3 weeks ago, and we're at the top of a larger trading range. So the bulls really want to capitalize here, bring it to the upside, squeeze any bears that took shorts here, and then we could see a nice pop to the upside. If the bulls cannot do that, this could be the start of a bearish leg down. As far as our operating plan for this week, still like preferreds, even though junk bonds are starting to get into more attractive yields, and then we also still like small caps and U.S. growth. As far as the weekly swings, there's a list of them. We don't have charts for all of them, but for most of them, and so let's get right to it. First things first, U.S. small cap and U.S. growth. Small cap's up 0.29%, good bullish week, but it is a sell signal, a weak sell signal for U.S. small caps, but we did in fact get one, and same thing for U.S. growth. We've got a sell signal there. Someone, I guess you may argue that it did trigger this past week, but it was an even weaker signal the prior week if that's the case. Nonetheless, still looks okay for U.S. small caps and U.S. growth. Really need the bulls to step in here and advance it to new highs. A strong breakout would indicate bullish strength coming into this week. So we'll see if we can get it, see if the bulls can step in. But nonetheless, we still want to, while we're in a bullish long-term stance, we want to remain in the stronger between small caps and large caps, and then growth and value. And these are certainly undoubtedly the strongest of their respective partners there. U.S. Treasuries down 0.14% for the week, basically a neutral week. And you know, we're building. This could be either a bearish, a bear flag where prices are just consolidating for another move down, or this could be a turning point. We don't know. You know, when you have moves down, it favors the bears for a bear flag. But if people get worried and they want to fight interest rates, then we could see some moves to the upside in Treasuries and then some other bonds as well. Australia up 0.6% for the week. Looked really bad for Australia throughout the week, and then they ended up closing pretty darn close to the highs. So this is a buy signal. If we can get a trigger this week, it'll be good, and then hopefully break this trend line right here, represented by the orange line, and then eventually this resistance trend line right here. So looks good. This could be a double bottom. You can see it from right back here. It looks like it was back in March. And this could be a double bottom. See if we get it, but looks okay for Australia. EAFE value, terrible, down over 3% for the week. And we'll see if we get follow through. About the only good thing that I can, well, a couple things. Only a few good things that I can say about this. We're down on support. We're in our second purchase range, and then the bears could not close it on its low, so you can see we had some buying come in close to support. What we're looking for this week is a buy signal, which will be a bullish bar above. If we can get prices basically to a close above this past week's close, that would be a buy signal, and then we want to see the trigger to the upside. So this is the first time down to the 89 EMA for a while. So we'll see if it can hold here. And basically what would probably end up playing out is we start to see these moving averages started to converge, come together, squeeze, and then hopefully a pop to the upside. So we'll see if we can get that. Healthcare down 0.6% for the week. Doesn't look great. Basically a neutral bar or a bear bar for healthcare, but we really want it to remain above this breakout level right here. We got a second purchase range down in here, pretty far down from where it is right now. Transportation, bad week, down over 2%, almost 3% for the week, 2.72 to be exact. Second purchase range down in here, and if it does continue down, we want to see a strong bounce on this moving average. And if it doesn't, then we'll look at getting some more down in the second purchase range, depending upon how it looks at that time. Operating plan, nothing new for the monthly trender, but we like natural gas. We got a buy signal last week, and essentially the play is that it's been in a trading range for a long time now, many years, and we're approaching the top of the trading range. There's a couple of trading ranges, the top of a closer one, and if we can get a buy signal, then we would essentially be saying that, hey, we think this thing's going to break out to the upside and give us a strong move to essentially just like oil did. So we'll see if we get that buy trigger. And with that, have a great week, and we'll talk to you next time.